a pretty decent rally, Carol Massar, 2.5% on the S&P 500. Well, is that going to be 2.5% tomorrow as well?
I don't know. Time will tell. Let's see if Tesla has anything to do with it. Maybe we could get some indications from Alix's shoes. Is there anything that we can get out of that?
Nothing.
They're
you can
groovy.
learn nothing. These look like they're from the 70s. So I don't know what that tells us about inflation.
Wait a minute. Wait a minute. I don't know. Yeah. Are they platforms?
Yes,
They
they're
are.
platform. They're like 5-inch platforms.
You know, like how skirts, like minis, maxis, like give
Yes.
indication for the economy?
Is this what we're talking about?
I don't know if
No.
deals are going to be that. But you know what's going to happen? We're
What?
going to get Tesla in 4 minutes.
All right. We'll get back to what we
But
need to know.
Make an Alix
before
watch.
that, I think we should talk about why stocks are rallying today. The crucial moment of the day was just around noon when our own Bloomberg News team reported Treasury Secretary Scott Bessent's comments from this closed-door program down in Washington. It just shows how eager people are to see progress on the trade deal or a trade deal. We don't have any details on it. We have no idea of a timeline here. We don't know anything about it, but investors are optimistic.
I mean, yes, but ... We also saw futures higher before any of that
Yes.
happened in the morning because we had that sell-off yesterday. So it's hard to take direction from the headlines. But to your point, when volume is thin, you're going to have whippy moves.
And I would just point out, too, and we also had some decent earnings today that I think also maybe gave some folks a little bit of life, whether it was Pulte, whether it was GE, whether it was Synchrony, even Verizon and Danaher reporting some relatively decent earnings here. And 3M as well, one of your favorites, up
3M.
about 8% here on the day as we get the closing bells in New York. And as we await those earnings out of Tesla, a Dow Jones Industrial Average higher by 1,000 points or 2.7%. The S&P higher by 130 points or 2.5%. The NASDAQ adding about 2.7% here on the day. And the Russell 2000, the small caps, up on the day, 2.71%.
Wow, nice big move up to the upside there. Let's take a look at the S&P 500. Guys, almost every name higher in today's session as we settle in. Right now I'm looking, Alix, at 494 names actually gaining in the S&P 500 today, 9 to the downside.
Pesto pie, guys. It's all green. Let's just leave it right there. Green across the screen. You got consumer staples, industrials, healthcare, and real estate. Those are the underperformers, and they're still up anywhere between 1.5% to 2%, outperforming financials, discretionary, and communication services. Guys.
All right, guys, let's get to some of the individual gainers as we await a drop of earnings, including Tesla. And I'm going to start with Tesla, up as much as 6.7% ahead of earnings today, finishing with a 4.6% gain. It was a top gainer in the NASDAQ 100. Dana Hull actually putting out that the treasurers of 8 U.S. states have written an open letter to Tesla's board of directors expressing concern about the company's direction and Elon's level of attention to its challenges. So we'll see if we get maybe any kind of upbeat news that maybe puts some of them, their concerns at rest, but we'll see. For solar.
And I just want to add, too, we're actually going to talk to one of the signatories on that letter, the California State Controller, in the 4 p.m. hour right here on Bloomberg.
Pretty cool stuff. So that'll be interesting. In the meantime, First Solar, we did see solar stocks rise after the U.S. set new duties as high as over 3,500% on solar imports from 4 Southeast Asian countries. So the whole sector really popping in today's session. You have First Solar up about 10.5%. And Equifax, you mentioned earnings. Number one gainer in the S&P 500. The Consumer Credit Agency did report adjusted earnings per share for the first quarter that beat the average analyst estimate. They kept its 2025 guidance even with uncertainty in macro and markets outlook, and they boosted their quarterly dividend and announced a $3 billion buyback. So again, that stock, Equifax, up about 14% today.
Okay, you had the gainers, I have the decliners. I want to start with Northrop Grumman. It closed down 13%. This is its steepest one-day drop going back to 2008. The company reported a 47% decline in first quarter profit. It missed analyst expectations. It cut its earnings forecast for the year due to increased costs for its B-21 stealth bomber program, a $477 million addition to its pre-tax charge on that B-21 program, and slashed its outlook for operating income by up to $600 million for this year. Also, Kimberly-Clark getting hit with tariffs, as a result of tariffs, I should say, down 1.5%. The company lowered its profit expectations for the year due to uncertainty from the global trade war's impact on its costs. The company estimates tariffs are going to add about $300 million of incremental costs, which with plans to offset these costs over time by finding savings within the supply chain. And finally, Halliburton shares falling today by 5.6%. The company warned investors that tariffs will impact its business units. It expects a 2 to 3 cent per share impact on the second quarter. Shares fell as a result. 60% of the tariffs impact affecting its completions and production unit, which houses its fracking business. Alix.
All right, just real quick, want to hit on yields here. So you have the front end selling off a little bit, a little buying in the back end, but that buying in the back end was no match for that dramatic selling that we've seen in the last few weeks. We did a 2-year auction, so we get a 5 later on this week and a 7. The 2-year auction was fine. I mean, nothing right home about a little weak bid to cover ratio, but you got lower yield, so a little bit less incentive on that, guys.
Yeah, as we await the earnings out of Tesla and a few other names, I want to bring your attention to Oklo. This is the nuclear power company that helps to build nuclear fission reactors, down about 11% right now. We've now learned that Sam Altman, of course, this is the co-founder of OpenAI, he was the chairman of the board of that company. We're now learning that he has stepped down from that role. Not quite sure for the reasons, though. We should point out he's definitely a busy guy with his other projects, but nevertheless, Sam Altman, who had been the chairman of Oklo, stepping down from that role. Something to keep an eye on there as the shares move lower here in the after-hours trade.
Yeah, Dow Jones, though, saying Oklo to continue working with Altman to explore strategic partnerships with leading AI companies, including potentially with them. So there's a little bit more to it. Hey, some earnings. Intuitive Surgical just crossing the Bloomberg terminal, folks, and the company coming out first quarter revenue slightly better than what the street was expecting. $2.25 billion. Estimate was for $2.19 billion. First quarter adjusted EPS also coming in 9 cents better than what the street was expecting, coming in at $1.81 a share. And then some outlook sees fiscal year gross profit margin 65 to 66.5%. Had seen 67 to 68%. We are seeing the stock taking a bit of a hit, down about 5.8% here. So that has to do, one would assume, with that outlook.
Okay, I had one of those surgeries with one of the intuitive robots.
The Da Vinci.
Oh, yeah, me too.
Yeah, it was great. And by the way,
it was great because you were awake for it.
Well, no, I was
no. That's what I'm saying.
Like, I had a real thing. And I should point out, my doctor was a pioneer in that. Not to brag or anything, but he was a pioneer.
Okay,
in the Da Vinci
that's some good flexing there.
Good to know.
My valiant fight.
Nice job.
Hey, while we await Tesla, we're hearing from some other companies now. Capital One with the results. First quarter adjusted earnings per share beat estimates. First quarter net interest margin coming in just shy of estimates at 6.9%. Capital One first quarter adjusted EPS coming at $4.06, beating estimates of 3.6%. Shares right now down by about 0.9%.
Tesla earnings crossing the wire. Adjusted EPS, a big miss, 27 cents a share. The street was looking for 43 cents a share. Revenue in the most recent quarter, $19.34 billion. That's a big miss. The street was looking for $21.37 billion. The company also saying that the tariff landscape is going to have a larger impact on its energy unit. It's also saying that it's difficult to measure the impacts right now of global trade policy, and also saying that its rate of growth will depend on a variety of factors and that it will have to revisit its 2025 guidance when they give their second quarter earnings update in about 3 months' time, guys. You see the shares only fractionally lower, of course, down about 51% since that all-time high back in mid-December.
Well, here's a fun sentence from Tesla, right? Sufficient liquidity to fund our product ramp up. You never like to get, you're glad that they have sufficient liquidity, but to sort of preempt it, to say that statement always gives you a little bit of angst as to why. And that operating income for the first quarter coming in $399 million estimate was for over $1 billion.
I'm going through the release here. You guys mentioned the automotive and energy markets continue to uncertainty there, but the note saying this dynamic, along with changing political sentiment, could have meaningful impact on demand for our products in the near term. We remain committed to expanding our business model to include delivering autonomous robots across multiple form factors and use cases, powered by our real-world AI expertise, to our customers for use in our factories as we navigate these headwinds. I know you guys are going to be speaking to Ross Gerber soon. He wants to hear more about cars and less about the autonomous robots that the company is working on.
I'm just going to say, and also in that release, the financial summary, I mean, there's a lot of declines year over year. Total revenue decreased 9% year over year, $19.3 billion. And they talk about the items, decline in vehicle deliveries. And they talk about, in part due to that Model Y update, they talk about reduced vehicle average selling price due to mix and sales incentives. They talk about currency, higher regulatory credit revenue. I mean, stock, I don't know. It's like investors trying to make sense of it.
Yeah, and this gets to this idea, sort of what's in the pipeline as well. I mean, one, I just want to point out to Alix's point, too. I mean, we're talking about a company, when we talk about liquidity, remember, this almost feels like deja vu. Remember, a few years ago, that was all the talk. Every quarter was, how much cash is it generating? How much is it burning? We're seeing that drop in free cash flow, at least in the most recent quarter. And, of course, now that they would put out a statement about that, a fiduciary duty to do so, I think you have to at least be mindful of that if you are an investor.
All right, lots of questions, I'm going to guess, on that analyst call. So looking forward to seeing what more color we get around their business. All right, guys, that's a wrap. Our cross-platform coverage, including Tesla earnings on radio, TV, YouTube, Bloomberg Originals. We know we're all going to continue talking about Tesla. All right, that's a wrap. We'll see you again, same time, same place tomorrow.